Hey, this is Danielle from Black Business Boom and Black Owned Nashville, and I'm live with our mortgage expert, Money Mitra. How are you today, Mitra?
I'm doing very well. How are you, Danielle?
I am fantastic. Happy to be here. Happy to be alive. And I am excited to be learning more about cash out refi. So if you are a homeowner right now, make sure you tune in because Mitra is going to be giving us a lot of information about that process, how you can use the equity in your home, pull out that equity to do all kind of things that you may want to do, make all kind of moves with your money. If you have some equity in your home, you're sitting on money. So let's get into it, Mitra. Let's talk about it. If someone is a homeowner and they have a little equity in their home, do you recommend doing a cash out refi?
So it really depends on their individual situation. And what I say is to have an epic deal, we look at four components. There's the equity. So right now, home values have been exploding. So if there's some goals that you have not been able to achieve, right now is the perfect time. You're probably sitting around like, how can I fund this business venture, this real estate investment, or really maybe just catch up my kids' college fund? I've been able to help people do all of that. I think someone took out some money to do options because they had been learning options trading and they wanted to have some more money to play with. So as long as you can afford that payment and like I said, the equity has been going up, it's a great time to take a look at that. And then that kind of rolls into the potential. Like, what are your goals? What have you been putting off that maybe is, really aligns with your purpose and you need some extra funding? This is where you can really use your home as your own bank. And, by having the income, because there is a debt to income requirement, as long as you qualify, also with high interest debt, it's a great time to pay that off, because even with the rising interest rates, there's this fear right now, that, the rates are going up. And yes, they are. But honestly, when it comes to a cash out refi, the rate really doesn't matter as much, because if you think about it, the interest rates on credit cards on average can be like 14.99 to 30%. Exactly.
Yes.
So even at these higher rates, when you look at the blended rate, you look at the interest rate, of the mortgage plus your debt, you're going to come out much more on the better side of that. And then also the final C of Epic is the credit. So as long as you have the credit score to do that, which we have, some products that are more credit score sensitive for those that maybe don't have, their score where they need to be. I always tell people, don't worry about having your score being perfect. Just get in the game. Like, don't put your goals off, because then you're going to put off even more time, and waiting just to get that score when you really didn't have to.
Okay, that's great to know. So tell me, I know there are folks that they may go the route of a home equity loan or line of credit versus a cash out refi. First question, do you do home equity loans and lines? Secondly, if do you have a particular candidate that you would say it's best to go the cash out refi route versus a home equity loan or line?
So I personally don't do HELOCs or home equity lines of credit, but I do have someone that I refer them to that does a great job with that. And in comparing, for the different type of clientele, it really depends. If you have like a short-term goal, or if you have a history of paying more on, let's say, your credit cards or other bills, a HELOC might be a good fit for you. The pros and cons are, sometimes the rate can tend to be lower and it's easier to get, even though cash out refi is not necessarily hard, but it also is interest only. So you're really not going to see that reduction that you will see on a cash out refi. So a cash out refi allows you to pay it over 30 years. Your payment is going towards principal and interest versus just interest only, where you don't really see a reduction. And sometimes I talk to people that, actually today I had a client who, her dad, when she inherited the property, she thought maybe it was free and clear, but actually had a line of credit on there and she wasn't able to, get that down. So then she rolled it into a cash out refi and was able to have more peace of mind and knowing that payment would go down over time. And the good news is, on a cash out refi or a mortgage, my loans are no prepayment penalty. So you can always pay more and pay it off faster, but there's principal also being knocked out along the way over the amortization schedule.
I love it. Great information. What does the process look like? Some folks are, really intimidated by how long it's going to take, what the process looks like, all the documentation, all of that. So tell us a little bit about what the process looks like for someone in moving forward with a cash out refi.
Okay, so that's a great question. So one, you would go ahead and fill out the application, and the link should be somewhere here. And then, just kind of similar to a purchase, I'm going to get information about your income, your debts, your credit, and I'll work up an option. And the documents really aren't that much more than they would be for a purchase, except this time, because you already have the home, you would be supplying, your homeowner's insurance declarations page and your mortgage statement, because you actually have that at this time. So again, I'm just, working up an option. And I really like to, sometimes provide, multiple options or really customize it on the phone, because it's not like a one size fits all. I mean, everybody has different goals, and, some things you can pay off and give yourself more cash flow and more savings over the month. So it's great to be able to get on the phone with the client and work through that to really customize the loan and really allow them to hit, multiple birds with one stone. Because, if they want to never refinance again, I want that to be an option for them as well. And to really consider all of the financial goals that they have, not only thinking about the short term right now, but about their future self and their future goals as well.
So I sat here and thought, I don't know if we really, for the ones that don't have a clue what we're talking about, let's maybe back up and tell us, what is a cash out refi? It hit me that I didn't ask you the main thing, and kind of, because I used to be a banker, I know these things. So I took for granted that there may be folks tuned in that don't really know what that means. So can you just break down for us, what is a cash out refinance for an existing home buyer?
Yes. So really, to simplify that, it's pretty much just, taking the equity out of your home to be able to achieve certain goals. So sometimes we'll pay off certain things in the loan, and we as the lender will send, checks to the creditors that we're paying off. Or if the debt to income ratio works and you were able to get the cash back in hand, then we can do that as well. So it really just, gives you options on ways to tap into the equity. And so basically, for most loans, you get to go up to 80% LTV, which LTV means loan to value. So what that means is, there's always an appraisal, or typically for a cash out refinance, some, just a regular rate and term. Sometimes you can get a property inspection or an appraisal waiver. But on this one, we need an appraisal to see what the value is. And then the max that you can typically go to is 80%. The reason why I say typically, because there is a VA loan option where you can go up to 90% or even 100% of the value of your home, depending upon your qualification. But for most borrowers, for conventional VA, USDA, you're going to be able to take 80% of whatever the appraised value is. So for example, if the home were to appraise for $100,000, then the total loan amount could be 80% of that, or $80,000. So if that's $300,000, then you would be able to do the max of what was that? I had it in my brain and then it went away. So
I'm like over here trying to do math, like, Lord Jesus, I'm over here trying to do math.
That was the point. 80 times
240,000.
So that would include, also the cost of the loan as well in there. So the great news about a cash out refi is you don't often have to bring money to the table. Mm-hmm. Whereas a purchase, the concern is, how much money do I have to bring? As long as your home appraises, you can roll it right in there and bring nothing to the table and get money back at closing.
Okay.
So that's, again, that concept of, using your home as your own bank and being able to draw out that money versus having to go to the bank, beg and plead with people. Like, you're sitting on your own bank, on your own bank account.
If we want let me ask this for folks that are like, I don't know, I'm not sure if I have enough equity, or I'm not sure, is there a simple way for them to try to kind of figure this out on their own? If they have, let's say they go to Zillow and Zillow is like, your house is about, X amount. Can they simply kind of take that amount and do it times the 80%, look at what they currently owe and kind of get a roundabout figure of where they are? Or is it just easier for them to come to you and let you do that?
That's a great question. I mean, if someone tends to have analysis paralysis, then I would say just come to me and let me do my due diligence and research on the back end. But it is a great way. I mean, Zillow used to be really off and all over the place, so there was a lot of complaint about it. So what I like to do is, when I do my search, I'll look at like 3 different places, like Realtor.com, Redfin, and Zillow, and then I'll kind of come up with a number depending upon how I feel about that. And, to always go conservative is not a bad thing, because if the appraisal comes in higher, we can always reset and readjust the loan option at that time. So, sometimes it comes in higher, sometimes it comes in lower, and sometimes it's odd, but it comes in exactly what we think. So it just really depends. An appraisal essentially really is an opinion of value, based upon the comparables, which means the most recent sales. They like to do it within a mile radius, if that exists, but if not, they'll go out further, and they really like to see the most recent sales in the last 3 to 6 months.
Okay. So simply put, if I'm try to break this down for the folks. So let's say um, the house is worth $100,000. Let's say we're doing 80% LTV. So that would be $80,000 is the max. And I owe $50,000 on this $100,000. That means that it's possible, if all goes according to plan, that I could take $30,000 in cash out up to that 80,000 LTV, right?
Correct. The 30,000 minus, the closing costs, depending upon which rate they choose. Those are, some different factors, but ultimately, yes.
Okay, fantastic. I just want to break it down as simple as I possibly could for folks. I know it can be a lot to figure all of this stuff out, but again, of course, the easiest way for them to just contact you, and you can help.
I love the way you simplify things, because it's like if you do it every day, sometimes you don't really understand, and sometimes when I'm searching, like how people are thinking, it's like, where do I even start? So.
Yeah, I'm the same way. When I'm talking about like marketing and social media, I'm like jumping, and I'm like, I didn't miss, I didn't break it down. So I love it. And now I think we have a good understanding. But if you're tuned in and you have questions, please drop them in the chat. So how long is this process typically from once you get started, you get your application in, they got to do the appraisal, all those things. About how long are they looking at for that entire process?
So, a lot of banks are taking much longer, but right now I'm able to do a cash out refi really in about 30 days. So really about the same time frame as a purchase. I'll say 30 to 45 just to give a cushion. Yeah. But, it can, as long as the borrower, is on board, is getting the documents in as soon as possible and not dragging their feet, there's no reason why it shouldn't take.
This is definitely a really great option if you have a lot of debt. Like if you are sitting with, a bunch of credit card debt and it's 20-30% that you're paying on that, you can use this and get a much lower rate, pay that stuff off. Like Mitra said, they'll send the check directly to the folks and pay them off. I think it's just an amazing option for folks to be, especially if you, like you said, you want to invest, you want to start a business, you want to grow your existing business, and you're sitting there trying to figure out, how can I do these things? You want to send your kids to college. You got, we all got a lot of things going on these days. Yeah. So to be
even
sitting
in money, if you have a bunch of money sitting there and you want to go travel the world, as long as you can afford that payment, it totally makes sense to do that.
Yeah, I love it as an option. So I'm glad we got to talk about this today, Mitra. If there's someone who's ready to jump in, they're like, you know what, I got some things I'm trying to do. I got some stuff I need to pay off. And I really want to get started with at least exploring this option for me and my family. What's the best way for them to reach you?
They can go to moneymitramortgage.com, or I believe the link should be down here as well. Mm-hmm. This link should take you right in to be able to complete an application. And then I will try to reach out to you. My goal is within 24 to 48 hours of having that application complete, work up some options, get some disclosures out once you select the option that we're going to move forward on. And once those are signed, that gives the intent to proceed. We'll order the title appraisal, and we'll be moving on, having that appraisal order, getting those remaining conditions in, and getting you to the closing table. And again, like Danielle said, this is a great option for anyone who has a lot of debt, high interest debt, because a lot of times we don't realize that if we pull out our credit card statement, it will actually show us like our current balance. Like let's say if I owe $24,000, on my Chase card, the minimum payment may take me 24 years just to pay off if I could pay just that minimum payment. So that could be, if someone's been paying 6 years on their mortgage, that gives them, could take that equal time. So sometimes they're like, oh, I'm going back in time, but you don't have to go back in time. We also have options for that as well. But clearing up that money and being able to throw it back in. I've been able to save people hundreds to, thousands of dollars a month by paying off that high interest. So if you feel like you're kind of sinking there, you may have an option just sitting on your home right now to be able to give yourself that reset button push. So, if that's something that you're interested in, let me know.
And I'll tell you one thing, we did a cash out refi, and we did a refi and then did a home equity. Either way, right now, the values, you want to take advantage of these home values being up. I'm going to tell you that, because the house appraised for like way more, $200,000 or so more than what it was purchased for, so you really can take advantage right now of being able to get a little bit more out of that 80%, because the home values are so high. So this is really the perfect time for you to be thinking about how you can pull equity out of your home. So
and I think a lot of people don't realize that equity really is paper. Like, it's just a value that's associated, so if you don't use it, you lose.
Then exactly. As soon as those values drop again, it's gone. So you really could be pulling it out right now, doing something with it. I think
and having that money go out and make you more money. I mean, that's what investment is. If we, switch to that investor mindset, it's like, how can I make money in my sleep? And so that's where people start to get really fascinated in this process, because they can take this cash at a very low amount. I mean, if you go look at how much personal loan interest rates are, even with the rates on the rise, it's still much lower and will save you so much money each month.
I love it. Next month, let's just talk about refinances, because a lot of folks are out here paying rates that are a little too high, also right now, and maybe they bought in 2007 or 2009, and it may be time for them to look at maybe doing a refinance to even get a lower rate, which that also may be a possibility doing this cash out process, that you even get a lower rate on your mortgage. So Mitra is here to help us with all of these things. And I know they get complicated, but she is definitely the expert, and she's someone who can handhold you through this process. So please go to the website, submit your application, or reach out to her on social media if you have any questions. Is there an email address where folks can email you some questions as well?
Yes, it's MITRA period SHARIFI at firstbankonline.com.
Love it. Fantastic. Thank you so much, Mitra. This was extremely helpful. I hope everyone enjoyed this session. Please drop any questions you have in the comments, and I'll make sure the Mitra is tagged and comes back to them. Have a wonderful day, and thanks so much for tuning in, and thank you again.